All right, welcome back, everyone, and another week for the uh, broker training. Today, I wanted to focus on a couple of items. I feel that the market is shifting, and I kind of wanted to help you guys understand the reasons why I'm feeling this shift in the market. How many of you guys have felt the kind of a different environment right now ever since July began? I feel this month has been very interesting, becoming a little bit more what's called a less so much of a seller's market and a little bit more of a normal market. Are you guys feeling that a little bit of yourself in your business? So here's what I'm seeing. The market in San Gabriel Valley, which I follow, is actually quite interesting. During the pandemic, we've been having a short supply of listings. We've been having a whole year and more of tight inventory supply, in which any listing that was going out on the market, there was a lot of people interested in checking them out. There's a lot of activity. There was a lot of people, buyers for the most part, trying to purchase or write offers on these properties because a couple of factors. The two biggest factors is number one, the interest rates were extremely low during the pandemic. The government saw this and they decreased the interest rates nationwide. So that way it could attract more borrowers to borrow at a lower attractive interest rate. And so that caused a big spur of activity towards, hey, I could buy a new house and pay very, very low attractive interest rates like 2.5%, 2.75%, or even lower. I saw some people getting 2.375% for a 30-year loan. And during that time, they could borrow money cheap. At the same time, there was a ton of activity of people who refinanced their properties, existing mortgages, and they turned that 4% interest rate into a 2.75 and whatnot. So because of this activity and the environment in the lending, it made people have all this additional money available, access to easier access. When you couple that along with any stimulus that they received from the pandemic, the additional tax laws that changed, which is, all of your children were getting like double the amount of child tax credits, and you added stimulus packages from the CARES Act, which allowed almost anyone who had a job to either file for unemployment during the pandemic. It allowed self-employed people to get unemployment as well, and it qualified a whole bunch of people to get access to capital. And they could also apply for the PPP loan, which gave disaster loan benefits to those businesses affected by the pandemic having to shut down due to the county orders. So then you have all this capital being held by people, accessed, and they were able to have the money. Secondly, anyone who was, savvy enough, everyone saw that the stock market took a crash in February and March of 2020. And so if you put any money investing into any stocks during that March period of time, a lot of people have now doubled or tripled whatever they invested in numerous types of stocks or indexes and mutual funds. A lot of those portfolios, if you timed it right and you bought the dip, you were basically doubling and tripling your money without having to do anything. Okay. So those portfolios have created a good amount of percentage of people, maybe the 20% who have some who are investing in stocks, all of a sudden having higher net worth and higher stock portfolios, and enabling themselves to purchase, reinvest, and or sell for gains, and put the property and money into real estate, buying rental property. Or maybe they're deciding to upsize. So they, instead of living in a condo or their first primary home, now they're moving from the starter home into something that's more luxurious, or a better neighborhood, better school district, or closer commute. Or what the whole trend was going was moving away from metropolitan areas or very, very urban areas into the suburbs, and moving into properties with a big backyard and people with looking for a pool, people looking for raising their families because they spending more time at home and working from home. They wanted to have a better place to call home, right? So that we all know this, we all know these trends, but how do we explain this to our clients? How do we set up the story we're trying to tell when we're talking to a seller or whether we're talking to a buyer? The story makes sense. This is how we should be kind of describing the environment. And during this whole past year and a half of the pandemic, that tight supply that I talked about earlier, coupled with access to capital and people's net worth raising and all this extra money from refinancing and the CARES Act, enabled people to go on what I call a frenzy of buying. Okay. In a situation where sellers were afraid to expose themselves to the pandemic and COVID, they a lot of people took their property off the market or delayed selling their property. And they were afraid of catching COVID. They were afraid of people, strangers walking in their home. And there's a good portion, half the people out there who don't have the luxury of selling their property while it's vacant. So they still live there or they have tenants there. And because of the Tenant Protection Act and the eviction moratorium, there's not many listings hit the market because of the uncertainty. So if people are not putting the market properties on the market, that created a high sense of demand towards those that were putting their properties on the market in the MLS. And if once you put it on the market, these sellers were getting lots of activity, lots of demand, lots of offers, and able to write multiple counter offers, best and final, reduce your timeframes for your contingencies, remove your due diligence within 10 days, waive the appraisal value. There's a lot of things where sellers had leverage against all of these crazy frenetic buyers. And the sellers, because they're the ones that have this, only a couple of homes on the market in every, section of town. Um, that's how we created our own mess, which is, competing against one another and best and final, leading to many, many offers being accepted. 50K over asking, 100,000 over asking. We just had a listing sell 300,000 over asking, and the asking price became a situation of being really just to drive activity. It's not really necessarily what it's going to sell for. It could sell for much higher, it could sell for much lower. We know the asking price is just a figure to drive activity. At the end of the day, the market speaks for itself. The market tells you what the price is going to be. And if it had a pool, it had a single story, it was a big backyard, you got lots of activity and offers, correct? Now, because of the prolonged COVID and the extension of the eviction moratorium and the reinstatement of the Delta and the Gamma wave of variants of COVID, guess what? Now there's further protections, there's further eviction moratorium and stuff like that. And this is creating a lot more uncertainty. It's still not a full job recovery yet. There are still many people collecting unemployment, but the situation we're dealing with now in July, some of the owners have now taken back their properties. Some of the owners were able to get their tenants out. Some of the owners have been moving out of state. And therefore, we're starting to see supply hitting our marketplace. I don't care what city you are in California, what county, supply is now on the rise compared to the last year. So every city you're searching for your buyers, even though you've had failures and disappointments and rejections and not gaining your prop buyers accepted into a contract, that's all in the past. They've already seen it all and had some of that frustration in a hot market, but I'm seeing it lean less leverage against the seller now, where I'm seeing properties actually having longer days on market. I'm seeing a lot more supply in which there's options now for buyers to see 10 homes this weekend, and there's lots of inventory for us to go out and sell. So I want to ask you, realtors representing buyers, go back out, re-encourage your buyers to come back to the market, and all the frustration they experienced in the past, now is the opportune time to come back, review and check out some more homes because the leverage of the sellers is less. Okay. So I've been talking with lots of listing agents. I've been talking with other broker managers, and we all feel the same way. We all feel right now it's softening. The market is now having a little window of opportunity where you're not competing against 20 offers anymore. Maybe it's just a normal 5 and 10 offers you're competing against. And that's enough. Okay. So the other thing I'm noticing is the appraisers are kind of being a little more conservative, whether this is a national or a lender initiative, but we're noticing they're a little bit more conservative where they're not giving just whatever appraisal value, they're using the comps, and the comps are softening a bit. So what am I seeing now? I'm actually seeing some listings having to price reduce, and that's not normal. In the last year and a half, we saw very few price reductions. Maybe the listing agent didn't price it properly in the first place, or maybe the seller was very greedy and they had a high exorbitant sales price. But at the end of the day, the buyers out there are not stupid. The agents out there representing these buyers are smart. We have comps, we know territory, we know price per square foot, we know what a lot's potential should be based upon its zoning and lot size. Therefore, today's market, I'm experiencing and seeing a significant amount of price reductions hitting our market today. And if you don't notice it, that means you're not checking your MLS on a weekly basis, because I'm seeing longer days on market above 21 days, and I'm seeing, small price reductions like 10,000, 20,000 now. Significant ones I've seen in Alhambra, there was a $300,000 price reduction right next to In-N-Out on next to Alhambra. And so I'm seeing some sellers who were trying to aim for the sky and the dreams of getting something way over asking, now becoming a little bit more realistic on what the market will provide them. So I'm encouraging you to go out in this marketplace right now, get these deals done, because it's a good environment where now maybe you're only competing against 2, 3 other buyers. This is not just me as a broker telling you this information. I've been checking with lenders. I read the reports on mortgage activity, and I've read that mortgage applications from new borrowers is on the decline. There's many new buyers out there there's many less buyers out there who are applying for a new loan or to get DU approved or get that pre-approval letter. So with mortgage applications on the decline, and with a lot of supply of listings now, guess what's going to happen? Okay. One, these sales asking prices or whatnot, they're not going to get sufficient activity. They're not going to get enough offers. There might be some people writing below asking offers, and you have an opportunity to strike some deals and negotiate again. Before, we had to just go with whatever the seller tells us on their multiple. Now is a time we can actually bring our skills back, negotiate this and that, ask for these price and terms so that we protect our clients. And there's the leverage that they have in the past. The realistic sellers will price them properties much lower now. They're not going to put exorbitant prices. They're going to put market act prices just to drive activity. And you will have a lot more communication with that listing agent. You should be able to get more cooperation. And I like to phrase it this way. In the past year and a half, the buyers who had the need, the desire, the motivation to find something that's single family, to move away from the from the urban areas or the metro areas, to move away from their multifamily or their condo, the buyers who had a real desperate situation to buy a property, they're the ones who finally got their homes accepted in the last year and a half. They've already purchased their property. They've already had to go above and beyond and beat the competition and write these escalation clauses, 5,000 over the next best offer situations. The desperate people have purchased already. Now, in today's market, we are left with the remaining buyers who couldn't do those steps, who are more realistic, who are a little bit more analytical. The buyers who had the ability to be patient, we're going to be able to get them better deals today and from the next 3 to 6 months. So let's go back out there and reach out to these buyers. They've been frustrated in failures in the past, but the desperate buyers who are going to be writing these crazy offers, we're not going to see them again because they're not going to buy again. They just bought. They already purchased in the last year and a half, and they're the ones who were the elite or the top 20%, or they kept their jobs, or they made a lot of money in the stock market. I don't care what they did with their employment or their money, but if they had it, they made the money, they purchased, they met the seller's demands. We're not facing that same competition anymore. We're just dealing with the normal people, the people like you and me, who understand the principles of real estate, that what goes up must come down. We've had 11 steady years since 2010 of steady inclines of appreciation in home values. It's been on average raising 2 to 4% every single year. And this pandemic, artificially, with the low interest rates, we probably had a 5 to 10% appreciation during the 1 year and a half pandemic. Now we're just correcting ourselves. We're becoming back to a normal market. We're seeing a little bit of the asking prices of the new homes I'm seeing on the market. They're a little bit more realistic now. They're not that exorbitant like I'm seeing during the pandemic, correct? Does anyone agree with me or you disagree? You guys are quiet today. I don't know why. But regardless of which, what I'm talking to you about is very, very realistic. It is what you should be consulting your clients on. It's how you describe this. Thank you, Grace. She says she agrees in the market activity that we're seeing. And I could tell you, how can I find this out? Okay, so let me teach you a little trick really quick. I'm gonna start sharing my screen. Does anyone have any questions or comments while I pull this up? Okay, I'm gonna start pulling up my MLS and show you what I'm talking about. Someone give me a city. Someone tell me what city you want me to research.
La Puente and West
La Puente area, Jean? Did you say La Puente? All right, perfect.
Yeah.
So I'm less familiar with La Puente. I haven't sold there in a couple of years. So this is a perfect demonstration. How do I, as a broker professional, make myself smarter? How do I sound like I can give a consultation to a buyer or seller who's looking in the La Puente area? So as you guys saw, I just simply clicked on INFOSPARKS from the MLS, and I want to help a client. You want to help a buyer or a seller, Jean? Understand the La Puente market.
Buyer.
I want to help a buyer understand a single family home in the La Puente area, right? So let's go ahead and talk about how do I do this and become a professional and very understanding of the market in La Puente. Here's what I would do. First thing I would do is I would type in La Puente City in California and pull up the city. Then I want to kind of look at the entire region as a whole of La Puente. So I would just pull in a different tab here that includes City of Industry and Valinda, area 633 of the MLS. Okay. And then if I really wanted to kind of show a little bit more information, I would type in the zip code of La Puente. So there's a school district as well. And then what is the zip code?
91744. 91744 and 46.
91744. Perfect, thank you. So then I would just go up here and type in 91744. And I have now 4 bars of tabs, a blue one, a red one, a green one, and a gray one, describing the entire sections of La Puente, right? But I want to fine tune this for my buyer. My buyer wants to buy a single family. My buyer wants to buy something, for example, maybe it's around 3 bedrooms or 4 plus, right?
Yes.
Okay. So the next thing I want to do is I want to have something that's probably at least 2 or 3 and maybe even 4 bedrooms. Let's say I'm buying a nicer property in La Puente, okay? I'm not going to put a price range, but I will put square footage of somewhere. Let's say I want 2,000. Let's say the goal is for them to buy a 2,500 square feet home. So in here, I probably put 2,000 to 3,000 square feet, like just like this as my criteria. Does that make sense?
Yeah.
If I dealt with a situation where my buyer wanted to buy a 2,900 square foot home, let me show you what I would do. I would actually clear everything. And if they wanted to buy a 2,900, I'd probably do something like 2,500 to 3,300. And that would basically let me go back, 2,500 to 3,300. That would give me plus or minus 400. Okay. So in this situation, I can do comps like this and see the counts and this and this and that. But for our purposes, let's just go ahead and not do this. I'll keep it more generic because this is for me to learn. So I'm going to keep it at 2,000 to 3,000. Okay, guys? Now, I'm going to do all sale types. Great. That's it. That's all I need to do now. I filled out my information of what my buyer is looking for, 3 or 4 plus bedrooms and La Puente and the area, different areas. Now, because I'm not as familiar of this, let's talk about what is going on in terms of supply of listings. Okay, so I can go to month supply of listings, and here is a couple of things I can kind of look at. Okay, this is stretching back for many years, where since January of 2021, look at this low supply. Let me stretch this back to 3 years. It's a little bit easier to see in the terms of numbers. Okay. Now, what am I noticing? Exactly like I told you right here, starting from 2020. Look how low the supply started becoming. Maybe it's easier if I do the line graph. In 2020, January, we had very low inventory, right? And all of these sections, there's only 1 to 3 listings hitting the market. These are month supply of listings, right? But I'm noticing a slight, as of May 21, you can see here in June 2020, this is only going up to June, by the way. So, because we're still in July. In 4 more days, they'll have the July inventory updated. But you can see here the area of La Puente, Hacienda Unified climbing up. And this is not so useful right now because we don't have too much information. It's actually easier to see from the active listings. How many active listings do we have? And since the beginning of January, there's only 3 or 2 that hit the market. Only 2, 1, 3. Not many listings hit the market as a brand new. But recently in June, boom, you have 17 in the La Puente Unified School District. That's a high count, abnormally bringing up the area of more supply. How about how many closings have we had? Okay. Closings are stable. It's about 2 sales every month, or 3 to 4 in every month. Not too many in this area, 2 to 4 sales a month. Okay, so not too much. Does that make sense? What about new listings? See, we are on the rise of new listings. It's going from an abnormally around a 10 average, all of a sudden to we have 18 new listings this past month in June. I bet you in July, when you check InfoSparks, August 1st, we'll have all the July data in here. You're going to see all of these spike up. Because log into your InfoSparks August 1st, you'll see the supply active listings and the month supply increase. Okay.
Okay. Thank you.
And look on days on market, we're going to see all the days on market start to rise as well. It's hard to tell just from June because everything I'm talking about in the shifting of the market is really pertaining to July. Okay. So how about how much is the percentage on average going over or under asking price? This is how you tell this is a seller's market. I went to the percent of the original price of the asking price on average. Guess what happens? All of these areas, people are paying 110% over asking, 10% over the asking price. So if you had $500,000 sale single family home, people on average are paying $550 for that home.
Yes, that's right.
Right?
Yep.
So now I know what's going on. And it's crazy how volatile, how, like I said, certain markets like La Puente, they're getting 10% over the asking appreciation just because they had a listing on there on the market. How about the price per square foot? All of us are seeing price per square foot on the rise. Okay, even La Puente, where it's a neighborhood I'm less familiar with, I can tell you everything is increasing here in every aspect. La Puente City, the zip code, the school district, even the greater area of 633. We're seeing on average 363 to 370 price per square foot on average. So I just kind of remind you how this is such a useful tool to share with your sellers or buyers to learn about the market. And I'm going to show you a cool trick that no one teaches you as well. Let's say I told my client, believe me, I'm telling you it's true, and you want to know what's going on with the price per square foot, or you want to know what's going on with, for example, the percentage of the original price. This is what you could do. I want to share this information with my client. So I go over here, push the share button, and I'm going to choose the live version. Okay. Then I want to give them and embed this in for something for what's called share away by email. And let's go ahead and share this. I take over this link. And if any new buyer went into my browser and used that link, you'll have access to this live access. Guess what, guys? If this is a buyer searching in La Puente, they can come into the same link on August 1st, and it'll automatically give them the July data. So this graph and data will move according to the months. Okay. And I could do the same thing for every single one of my buyers of every section I want to share with them. Oh, they want to know median or the average price per square foot. Great, I'll give it to them. If they want to see how many active listings are hitting the market in these areas, then I'll go ahead and put it in, and then they'll see in July, in August 1st, they'll see July's active listings rise. I can guarantee you that 100%. New listings will be on the rise as well. So at the end of the day, this is how I get familiar with a certain neighborhood. And then I just want to show you how I use this tool to kind of help me just be a better realtor to my clients. And I put together in a very nice format I'll show you an example of what I did. So in my demonstration, do you guys see my screen or no?
No.
No, let me start showing again my screen. I have a listing over here on 1720 Wilson, and my client was selling in Arcadia, Highland Oaks, and I just put together each link because my client is a professor and very, very intelligent. So here's all the active listings. Here's all the closed sales. Here's the average days on market. Here's the average price per square foot. And I let him find out the information that he wants to see. So I can tell you in Arcadia, you can see here, I clicked my link, okay? I sent this back in May. You guys see that? But when I click the link, it already has June data. So it updates itself. How can I use this information? I can give it to every seller I sold a past client to. Hey, you want to know about your city, your zip code, and your area, school district in Arcadia? Oh, here's a link. And I can give it to them. They can check this years from now, and they have a market update of their property in square foot, average month supply, how many days on market is taking, are things selling over asking or under asking? And this one, I like this original price average percentage because it's telling me everything here is selling like hotcakes over asking. This is how I educate my buyers, Gene, who are like, oh, I just want to pay the asking price, or I want to negotiate. Asking 600,000, yeah, I give them 585. I want a good deal. Great, buyer. I know you want a good deal, but look what the hell is going on in La Puente. The buyers on average are getting these deals 110% of the asking price. You have no chance. Okay.
Yep.
You're not going to get this property. I need you to write at least asking price or higher if you want to have a chance to get this home. So this is how I use this to educate a buyer to pay more than asking if they really love the home. If they just like it, fine. Write it below asking, write it at whatever you want to write it at. But if they love the home, they want to go all in. This is how I educate the client. We need to be 108%. Let's give it to be at least in the top 3 over the asking price. Make sense? So this is a great strategy to make you know an area. I haven't sold in La Puente in years, but now I can tell you what the price per square foot is. I can tell you that if I got a La Puente buyer, I'm going to have to write over asking. But as the months pass, that inventory will rise and the leverage the sellers have will be less. Okay, there will be options for my buyer. Maybe I can go ahead and not pay 110% over asking. Maybe I just pay asking price 100%. Okay, so I'll use this to my advantage. I'll educate my clients, and I'll be a savior for my past clients too, because all of the sellers want to follow their own zip code and market. So why not just share what I just shared? You know, the market stats. That's very helpful, right, guys? Okay, can you guys hear me now? So
yes, I can hear you.
Thanks, Laura. Appreciate it. So now let's go back into the MLS. How do I check from the MLS what the hell is going on in our marketplace? Let's show you one cool trick, okay? You can use the Market Watch, but I prefer making my own hot sheet. So I have San Gabriel Valley and whatnot. But let's say I want to follow residential homes in, let's say, north of 210 freeway. No, let's just do, what are we familiar with? I want to give you something how I follow properties. So I'll just do the 626, okay? I'm gonna just call this something. Don't worry about it. Now, I want to edit my criteria of my 626. And what am I looking for in my hot sheet? I want to see coming soons, new listings, price changes back on markets, and I want to see closed listings too for single families, right? And I'm just going to specify a few 626 areas that, let's say, the Asian clientele are looking for. So they're looking in these cities here, San Gabriel. They're looking at South San Gabriel. They're looking at El Monte. They're looking at Temple City. They're looking at Arcadia. They're looking at San Marino. They're looking at Rosemead. They're maybe even looking at Monterey Park. What else? Monrovia, Pasadena. And what else did I miss? That's pretty much it, but I'll leave it like this, okay? I could add in Covina, West Covina, Baldwin Park, and let's just say I'm just focusing here between 605 all the way to Pasadena. Now, in my specific search, maybe my client's looking for a 3+, and they're looking for a 1,200, let's just say 1,300 plus home, right? And I'm gonna just put 2+ bathrooms. So for my hot search for my client who wants to buy in this region here, I put together my hot search, and it's so easy to do. I just did this in 30 seconds, right? All I need to do when I check tomorrow or the next week for my same client who called me, hey, Kelvin, is there anything new on the market? Let's go see some homes, blah, 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 blah. All I need to do is check this out, and boom, there's 144 new listings in just these cities here. Okay, I got all this new stuff to talk about where I have 14 homes that I can show them something that they have not seen yet. Okay, now you guys asked me a question like, but Kelvin, my client is we're not looking at the $5 million range. Okay, great, then cut it out. Okay, you could filter it up to 1 million. You could filter what you want. But let's say right now, I'm just teaching you to learn about what's going on in the marketplace. So here's what I'm going to do. I'm going to go ahead and put 100 per page. And then I want to show you what's going on in terms of reverse days on market. Okay. Now, in this region, Pasadena, San Marino, San Gabriel, Arcadia, look what I'm seeing here. I am seeing a couple of things. Where are these arrows pointing on average? On average, they're going down. People have had to take a price reduction, or they are turning from pending to sold. They're selling it for under asking. Okay. So if I don't want the sold activities in here, I could take that out. But I'm looking for right now, I'm trying to kind of teach you there's different ways to play with the information. This is a greater overview, but if I wanted to filter this search and I want to take out the solds, okay, let's go ahead and revise my hot sheet. How do I revise my hot sheet? Okay. Yeah, the $10 million homes. Yeah, no one can afford that. I don't even consider this. Okay, let's go ahead and revise this. Okay. So let me go back. Customize. And 626, I'm going to edit my criteria. I'm going to take out the closed. And I'm going to cap the price to 1.2 million or less. So that way we take out all these multi-mansions, and let's look at the normal market where everyone's buying normally up to about 1.2. That's a vast majority, 80% of the buyers out there. And this will give me a more defined picture of what's going on. And don't forget, your hot sheets could be a 7-day hot sheet. It could be a custom, like a 30-day hot sheet, but this is only the activity in the past 7 days. Now let's take a look. Now I only have 44 kind of normal homes to take a look at in this region. And here's what I can see here. You got 5 coming soons, right? You have, when I kind of look at pricing backwards, there still is more price reductions than there are price increases. Does that make sense? So that's telling me on average, more people are struggling to sell their property. Let's base it on days on market, guys. So I just touched this, reverse engineer it to the longer days on market. My client tells me, hey, client, I want a better deal. Okay. Well, you'll find more leverage for the buyer the higher it is on days on market. Look at these price changes. Oh, these guys went from 979 and they dropped it 31,000. This guy dropped it 20,000. This guy dropped it 40,000. And remember I told you there was a significant price reduction from in Alhambra? Let me show you what it is. Look at this home over here. This seller originally listed the price at 1.1999 million. Okay, I went to the property myself and took a look. Now they dropped it 300K. Okay, and it's still 30 days on the market. It has not sold yet. Okay, but it's an excellent location right here by In-N-Out, Garfield and Huntington Drive. It's remodeled inside. It's beautiful. You got a nice remodeled backyard. You got a nice barbecue built-in area, and it's nice, pretty, and you have remodeled shape. Okay, but the seller was greedy or tried to get $300,000 more. But no one's stupid. They're not going to pay you a $1.2 million for this home, even though it's remodeled. It's still a smaller home compared to what $1 million should get you. Okay, so now that I can tell you, sellers are now becoming more realistic, and there's an opportunity here to really just find where the deals are at. Okay, because I just want to teach you how to be a better searcher, how to look for the better deals. If you want to create an extra tab, let me teach you a tip. Go to your settings right here, and here's a way I can add a filter. The hot sheet doesn't do it for me, but I was going to add price per square foot. Actually, I should be able to do it. Let me check if I could add one here. All right. So just type in price per square foot, add it in, boom. Let's say I want this right around the front. Okay. So if you have a client you like, and maybe this is an investor, maybe this is a person that's looking for a fixer-upper or a property with needs TLC, just filter this way. This is the easiest way to do it. Oh, they want to buy in this region? Okay, I can tell you these are the single-family homes that have the lowest price per square foot and then in ascending order. These are the properties that you'll get the best pricing on, or these are the agents that underprice their home to get tons of activity and offers. Okay, So here in El Monte, this single family is going for only $388 per square foot. The condition doesn't even look that bad. I can tell you this is going to be fought for. People will there'll be multiple offers on this home. Okay. So if you want a deal, this Elliott Avenue will have, I imagine this is going to go pending soon because this is the lowest price per square foot in the area and the price is not bad. You get a gated community and it's in good shape and it's detached. Okay. And no HOA. Okay, this is going to fly off the shelves. The next deal you could find is 11239 Elliott. And guess what, guys? This is our company listing. So I know Helen is selling this property. She's pricing it right. And this one's even newer. It's 2000 year built. It's a little bit bigger. And so same price, you still get a nice remodeled gated front. Actually, this one doesn't have a gate. I'm sorry. But this is the rear PUD. So I imagine this one will also sell within the next week. It'll be in escrow. You want to look for the next deal? Potrero Grande right here in Rosemead. It has only $410 per square foot on a big 8,000 lot. Calling out investors, bargain hunters. So if that's how you can find fixer-uppers, I know Vista San Gabriel, this is a hot area in North San Gabriel. This should be demanding a $500 a square foot. They're pricing it at $423 on a big 10,000 lot. I already drove by this the other day, and this one needs work. You need to work on the pool. You know, you could tell it needs some updating and renovations. But where can you buy San Gabriel Valley for under $423 in North San Gabriel above Longdon Avenue? This is not a bad price. So do you guys get what I'm trying to tell you and teach you guys how to be a little bit more efficient when you search? So you can add fields anywhere you want. In your hot sheets, I added price per square foot, but you can add all the filters you want, like pool or not, or you can add lot size. You can add other criteria like zoning, or I'm looking for prime property zone for R2 or R3. You can do all this cool stuff if you know how to use your technology. Does that make
Hey,
sense?
Kevin, I
Yep.
have one question.
Yep.
Talking about the square footage price, I always doubt how can we compare because different square size, the unit price is different because the big size, the unit price is low. The small size, the unit price is high. So I really don't know how to compute them.
Yeah, you don't only base pricing on one thing, which is price per square foot. You base it on the overall, and I'm just giving you indicators. So now the great thing about a condominium you're talking about, you're saying a $3,000 condo in Pasadena will have a lower price per square foot for the next door complex, which only has a 1,200 square foot 2-bedroom condo. And that's going to have a higher price per square foot. And my answer to you is, yeah, because the more square footage you have, the more it blends into bringing down the price. So therefore you compare apples to apples, and you don't compare 1,000 square foot to 3,000. You compare 2,500 to 3,300 square foot living areas and make it more in the same range.
Okay, it's apple to apples, similar size.
Yeah, similar size.
Okay.
You don't compare it to something that's a 2-bedroom to a 4-bedroom. And condos, the great thing about price per square foot is the only thing you really got to compare is really the HOA and the square footage and the condition inside the materials, because there's no lot or something, because like, you can have a 1,000 square foot single family in San Marino, and that can sell for $2 million just because it has a big $12,000 lot. So that's only one indicator. And when you're dealing with land, then you have to deal with the zoning and what its potential could be. And therefore it adds complexities and variables that real estate professionals need to be able to explain. And then you can use the price per square foot to your advantage or disadvantage, right? So sometimes you have a maximized lot, where I had one in Lombardi in Pasadena. And that was a 3,000 plus square foot with a big yard. And I was able to describe this as the lowest price per square foot for San Marino schools because we qualified for San Marino schools. And on the market, it was the lowest price per square foot because I had a very big 3,000 plus square footage. And when we checked the market, it was the lowest. Make sense? Good question, Julia. What other questions do you guys have? Because that's near the end. Do you guys have any thing from the MLS you want me to show you how to do?
Kevin, I have another question. Just recently, my customer asked me, she wants to buy a single house for owner occupied. She want to buy either Irvine or Newport Beach. But her question is, which city has a more valuable? I mean, in the future, more value of the property. These two cities. So how can I get the information also from the info, that kind of place?
Yeah,
Oh.
same thing. So I'll just do it briefly, really quick. Okay, I'm not going to do all of it. So you take out all of these little tabs, and then you said Newport Beach.
Yeah, and Irvine. So two cities compare who has the more value in the future to invest.
Okay, so you can add in other areas like Newport Beach has a nice section called Newport Coast, and that's a city of itself. So I don't know if you want me to add that in or not, but these are all $5-6 million homes where Kobe Bryant lives. And if you want just the city of Newport,
Yes, a city.
just the city of Newport Beach.
Yes.
Okay, so then that's this. I believe that's what I put here. Okay, and just the city of Irvine, but you could put in zip codes or school districts, just like I said. Now, your client says they want to look for a single family home, and what are they looking for? 3 bedrooms, 4 bedrooms plus?
4 bedroom.
Okay, let's just do 4 plus bedrooms, right? Okay. Now, obviously, I'm going to be looking at things that are at least 2,000 or 3,000 plus. So I'll include
yes,
both.
3,000 plus.
Okay. And I can tell you that Irvine, okay, let's look at, first of all, you're looking at sales price. So if you're looking at price, Newport Beach is double the price of Irvine, California. I already knew this already because Newport Beach is on the coast, and the beach coastal areas have a higher cost of ownership because of what's called the real estate location. Now you ask for what is going on in the city. People are paying over asking at Irvine, but they're paying 97% on average in Newport Beach. How about her number of sales? Okay, well, how about the closed volume? Okay, well, it's very similar. Okay,
yeah.
So the sales is very similar. Total closed sides. There's more real estate and more APN numbers in Irvine. So this was not going to be that helpful because Newport Beach is way smaller city. So because of that, you're going to have more sales going on in Irvine.
Correct.
So that's gonna always, Irvine has a higher counts in sales, but the price per square foot, guarantee you, Newport Beach is way higher. It's $13.51 and it's on the rise. Okay, $13.51 per square foot versus Irvine is still affordable, $5.80 per square foot, and all of this is newer construction built after 1990s. So active listings is going to be low in Newport Beach. There's not many active listings in the area, 64. Versus Irvine, you got triple the amount of listings almost.
More
Okay.
active.
So if you ask which ones is more desirable,
yeah.
Well,
Invest. Yeah.
based on this slide here, I could tell you the story that people are fighting for Irvine and is selling quicker, like hotcakes. They're selling on 21 days on average, versus Newport Beach is taking 40 days on average to sell. And this is just for the last 3 years. So does that answer your question?
Yeah, I think so. So
you just become an expert in 1 minute just by putting in some information, going through the slides, and being able to understand though there's differences between coastal versus a Irvine hot area with a lot of businesses and companies. There's a lot of jobs over in Irvine.
yeah, more practical in Irvine.
Yep.
Okay.
Okay.
Okay, thank you.
I hope you guys learned something from today's lesson. I hope you guys learned to be, doing small things that take 2 minutes for you to do and doing the above and beyond things for your clients and providing great service. So just showing you some stuff that's useful and helps me. I use some of these slides sometimes when I want to present something like I write a lower offer for a purchase, but I give what's called supporting evidence. This could be supporting evidence to make my case. And you can show the slide that makes it more favorable to you, whether you want to use the median or you want to use the average. The numbers, the data is yours. Okay. All right, guys. Thanks all for being here. I appreciate you guys learning today, and I hope I taught you something new. And I'll see you guys next time.
Thank you very much. Yeah,
Thank you.
you.
Bye-bye.